All right, so this video is strictly for the Discord group only, exchange room to be exact. We are overdue for a risk management video, and I feel like this is something that's super important. So definitely this is going to be something that a lot of y'all are going to be watching multiple times because it's more than just risk management, because we want to talk about trade selection as well, so you can know when to adjust your risk, because I'm not always putting the same risk on the same type of setups, okay? Now, this risk management video is going to be kind of broad. It's going to be mainly tailored to people that are trading on live accounts. Of course, you got to understand that trading on a prop firm account versus a live account is two different experiences, but it's going to be kind of a general risk management video. Of course, you got to follow the rules with whatever prop firm you choose. So make sure you don't over risk when you are trying to get funded or trying to get a payout. Understand what type of risk you're putting on, but this is just going to help you to calculate it manually. Okay, so we want to learn how to calculate my risk manually, and also understand what instrument I'm trading. So if you're brand new to trading, I advise you to go to the resources channel and look at the instrument that you are trading. Okay, whether you're trading silver, Russell, S&P, Dow Jones, whatever you're trading, you need to understand how it moves per point, because if you don't, then you don't understand what you're putting on as far as risk. Okay, so again, if you're brand new, go to the resources channel, scroll up until you see that you can see the symbol that you're gonna be trading, whether it's gold or whatever. Understand how much it moves per point, and then come back to this video so you can understand why we're doing this, so we can understand the dollar amount that we're gonna put on. Okay, now let's go ahead and go to the second slide. Now, what is risk management? Okay, now this is obviously a Google definition, but I'm going to read it out for you, and then I'm going to explain to you what I think risk management is. Risk management is using protocols to monitor and minimize the potential damage to your trading account while also maximizing the potential opportunity. Okay, so that's Google. My definition of risk management is understanding how much money you're putting on per trade. Okay, that's it. Let's just keep it as simple as that. How much are you putting on per trade? Once you understand that, you'll be less emotional in the market. You understand that, okay, I got to accept this loss. That's what I put on, and you got to live with that, okay? Let's go to the third slide. Okay, now position sizing. This is probably the most important. If you want to risk a certain amount of money, this is probably the best way to do it. Okay, now this is obviously you're gonna have to bring out some math skills. If you're not good at math, listen, this is what comes with trading futures. Okay, so if you want to understand how much you need to put on, like far as contracts, this is the equation. First, you want to put the dollar amount that you want to risk. Okay, then you divide that by the contract value per point. Now, what does that mean? It means whatever instrument that you're trading, how much is it valued per point? Okay, so NQ is valued $20 per point. That's important. And then after you divide those two numbers, you divide it again with the stop loss size in points. So, for example, say if you want to risk $800 on a 20-point stop loss on NQ, okay? But you're trying to figure out, okay, how much is that in contracts? You divide 800 divided by 20. That 20 is the stop loss size, and then you divide it. Well, that first 20 is the contract value per point. So again, $800 divided by the contract value per point, which is $20, because NQ is worth $20 per point, okay? And then you divide that by the 20 points for your stop loss. And that will give you 2 contracts for NQ. Now, for people that trade micros, that's going to be 20 contracts, okay? So again, if you're brand new to trading, then you should know that micros is 1/10 of the minis, okay? Micros is the smaller one. That's the little one. I don't trade micros. I trade the minis, okay? But just understand, it's always 1/10. Now, let's go on an example on the charts. Now, let's look at this. First, let's say we want to risk $7,500, okay, on this counter trend breakout right here. Your stop loss, which is right here, this is the positioning tool on TradingView. If you put the position tool right here, a short position right here, you can adjust this. And when you adjust this on TradingView, it will let you know how big your stop loss could be. Okay, so we're going to say that this is a 15-point stop loss, roughly. We're gonna say 15 points, okay? But we wanna risk 7,500. Let's say we wanna risk 7,500 on this, and this is 15-point stop loss. First, we need to understand how much is ES worth per point. This is ES, this is not NQ. That's why I said if you're brand new to trading, understand what you're trading first. So go to the resources and look at the symbol that you trade so you understand how much it moves per tick or per point. But we're basing everything off of points, though. I want you to understand that. We're basing everything off of points. So if ES is worth $50 per point and we want to risk $7,500 with a 15-point stop loss, remember the equation? This is the equation. Amount that you want to risk divided by the contract value per point divided by the stop loss size in points. So let's go back to it. And that would be $75, which is the money amount that you want to risk. $50 is how much it moves per point, $50. And then we have a 15-point stop loss. You divide those three, you get 10 contracts for ES. Okay, you only need to be putting on 10. Okay, this stop loss is a little larger. So if I have a smaller stop loss, I could potentially can put more contracts on. Okay, let that be known. But again, the equation is very simple. How much you want to put on, the dollar amount, how much you want to put on, divide that by the contract value per point. We know ES is $50 per point. And then how big is your stop loss size? Let's go to the next one. This right here. Let's say we want to risk 6,400 on this breakout that have a 13 EMA cross. This is also something that we're going to talk about as far as grading our setups when it comes to breakouts. So we really don't like this right here. We don't like this at all. So that would make me a little iffy on this breakout. Now, we can see that it won, but again, we're grading certain setups. We're looking for certain things. We don't like the cross, okay? But that's going to be something that we're going to talk about in the future. So say if you want to risk $6,400 on this 13 EMA breakout, okay? Now, first, let's see how big our stop loss is. Our stop loss is 32 points. And you said, I want to risk $6,400 on this breakout, okay? So what do? First, you understand, okay, what am I trading? I'm trading NASDAQ. How much is that worth per point? $20. Okay, cool. So we divide $6,400 by 20, and then you get a number, and then you divide that by 32 based on your stop loss size. Again, this is the long position tool on TradingView, and all you do is just adjust it to where you get in at and where your stop loss should be at, and that'll be 32 points according to this number right here, 32 points. So again, $6,400 divided by 20, they give you a number, divide that by 32, they give you a smaller number, and that comes out to be 10 contracts for the minis, okay? And remember, this is the minis. Now, if you trade micros, that'll be 1/10 of that, okay? So you just, you times that by 10, and that would be how much you can put on for micros. Now, obviously, you're not going to put 100 contracts on micros. It's no point when you can just do 10 contracts on the minis. But of course, you only can do this when you have a larger account, okay? But you definitely can still put 100 contracts on the micros, for sure, 110%. Those are the same things. Now, let's go back to this right here. Now, I hope that the position sizing has made sense to you. Again, it's not that hard. I just want people to understand that you need to put the right amount that you want to put on. And I feel like a money amount, and you should know how much that is in percentages based on your account size. You should know. And this is just the easiest equation, okay? And of course, we're always going to be using TradingView. So always look at how big your stop loss is, and you should know how much you're going to lose based on this equation that we have right here on this slide. So let's go to the next slide. All right. Now let's talk about grading setups, okay? Grading setups is super, super important. And I say that because I'm not putting the same risk on each trade. So I advise you to have a different range of contracts that you can use. Whether you're trading micros or minis, it doesn't matter because I'm not putting the same contract size on each trade, okay? So we have A+ and B- setups, C+ and C setups, D- and F setups, okay? Now, these are three different categories, okay? Because every single trade just doesn't equate to every setup that you're going to take. Like, they're just not the same. So the A+ and B- setups is more high probability setups that have a gap, setups that EMAs look good. And we're going to go to the future slide so I can show you what I mean by A plus and B minus setups. But you just got a high chance of winning. Okay, the C plus and C setups, we take these setups more than the A plus and B minus setups. Why? Because we don't get that perfect setup every single day. You know, even every single week we don't get A plus setups, but we get we sit in this range on a consistent basis. Okay, we are taking most of our setups are C plus, C minus setups. I mean, well, not C minus, just C setups, because again, everything's not going to line up every single day. But when you do get those alignments type of setups, you're going to be like, wow, okay, maybe I should risk a little bit more. Maybe, okay, let me see how big my stop loss size is. Maybe I could increase it a little bit more. Now let's talk about low quality, the D minus F setups. These are the high chance of losing type of setups, counter trend, trading before the news, etc. Again, I got slides on each of these categories, but I just want you to get an idea that you need to have a grading scale on when you should lower your risk, when you should increase your risk, when you should keep the risk the same. So let's go ahead and go to that next slide. All right, so definitely should write this down. If you're new to the Discord or if you've been in the Discord for a while, this is what I consider A plus B minus setups. I don't want to just read all of this. Just look at it and just definitely just write it down, put it in your head. But these are definitely something that I consider to be a plus B minus setup. This is what I would want to see, especially like a higher time frame confluence. You know what I'm saying? All the EMAs aligned. Stuff like breaking the candle entry does not have any moving averages in the way. Like those are like key things that I like, and that would make me want to increase my risk. Okay, let's go to the C and C plus C setups. Let's go to it. All right, low probability supply and demand, but the EMAs are perfectly in line. I feel like that's a C setup because the supply and demand setup doesn't have a gap, but your breaking the candle is above the 13 EMA if you're taking buys, or you use the 13 EMA breakout entry with the low probability supply and demand and the EMAs is aligned. That's still kind of like a C plus C setup. Take it. Most of the time the EMAs doesn't lie. What else is a C plus setup? Like supply and demand, EMAs are perfectly aligned, but there is no break of structure. That is definitely a C setup. 13 EMA breakout traded towards 200 EMA or counter trend. Going counter trend, some days they will win, you know. So I always try to consider counter trend. Sometimes I don't want to do it as often because you will see them lose, but you will see some counter trend breakouts perform very well. So I do feel like those are like C setups. They're not in the D minus F category because I've taken some and they have done pretty good sometimes. Okay, they're not A plus, so you will see them lose, but I definitely see there's like a 50-50 with that because sometimes you will go kind of trend, it literally reverse, hit stop loss instantly, but then some days it give you a 1-to-4 risk reward. You know what I'm saying? So you just got to just be careful. But yeah, again, write this down as well for C plus and C setups. Let's go to the last slide, which is D minus and F setups. So these are the worst possible setups. Okay, so trading too close to news, like 5 to 10 minutes before news, that's super risky. Okay, I think some prop firms don't even allow you to do that. They actually not even allow you to open a trade or something like that. I believe some prop firms don't want you to trade during the news. Trading during the New York Stock Exchange Open is low quality. And I only say that because it's hard to predict that on a consistent basis. Every single day it's not going to just shoot up, get you a breakout, and then it wins. Some days it will. I have taken the setup that candle closed at 9:35 and it won and it went up for the rest of the day. But that's not always the case. And people got to understand that the open is not going to go your way all the time. So it's definitely low quality. Like it's for sure 100% low quality. You don't really want to be in that noise, especially if news is going on. 13 EMA breakout with the 200 EMA being flat, super low quality setup. Why? Because that's not in the right market condition. Supply and demand, the 200 EMA come through the middle of price or is flat, wrong market condition. Like those are low quality setups. You will see it give you the break of the candle, reverse, hit stop loss. So again, like I don't want to break down all of these. It's just when I see certain things like this, this is going to cause me to lower my risk significantly, okay? Because I'm already preparing for the loss. So again, D minus F setups, I'm lowering my risk for sure, like without a doubt. C plus and C setups, I would either lower my risk slightly or just keep it normal, like just keep it just super casual, okay? If I'm going to say, if I lost back-to-back days, Monday and Tuesday, and I go into Thursday, I'm lowering my risk, okay? I'm trying to get that 1 and 2. I'm trying to get that runner to cover at least one of those losses that happened Monday or Tuesday, okay? If I'm on a winning streak and I don't want to, like my last 3 trades, I'm in the category of just keeping my risk the same. I don't really want to increase it too much. The only time I will increase it is if I get something like this. If I get that A plus B minus setup, like my EMAs look perfect, everything is looking aligned, I may slightly increase it, throw a couple more contracts on. But for the most part, I try to keep it in a smaller amount of range. I'm not dumping an extra 10 contracts or something like that. Like, I'm not doing that. But I might do two to three more contracts more than usual if I get an A plus B minus setup. So let's go back to right here. So again, this video is to show you how to manually understand without like the TradingView tool or anything like that. So you can understand how much money you want to put on based on position sizing and that equation that I showed you. But first you have to understand the instrument that you're trading. So once you understand that, you watch this video over and over so you can understand. Now, this video is slightly based on the quality of the trade, an A plus setup, a C plus setup, or a D minus setup, okay? Those 3, it only can fall in those 3. If it don't fall in those 3, then it's not a setup at all. You know what I'm saying? Other than that, I hope that this can help you on your risk management process, whether you're trying to build your live account or you're trying to pass a challenge. You need to have a grading scale. Every trade is not worth the same, okay? We want setups that have higher time frame confluence, EMAs look good. Those are those B plus, A minus setups, you know? That's that first category. And then we get a setup that's like, you know, a demand setup that don't have a breakout structure, but the EMAs is perfect. That's like a C plus setup, you know? Like, that's kind of like, it's okay, but it's not the best. But I'll take it because I've seen it win before, you know? And then we get that trash, let's say a 13 EMA breakout with the 200 EMA in the middle. You're asking to lose, like, you know, taking stuff like that, because the market condition isn't for a breakout. Breakouts work good with the trend. They don't work good when we're moving sideways, like, you know. So understanding the categories, you need to be adjusting your risk properly, okay? And again, trial and error, of course, because you're going to pick which ones you perform better, which trades you pick better, because you're going to see some that you perform better with. Like some of the students that's in the Discord exchange room, like they do better with the breakouts over supply and demand. Some traders only want to pick supply and demand. So first, get good at which ones you like better and which ones perform the better results for you. Whether you even trade liquidity grabs, like that too, you can still use that. But the grading scale is something that is getting applied to every single setup that we take. So, all right, I'll see y'all on the next video. I am going to be making that market structure video very soon, but I wanted to cover this risk management video so we can understand what we're putting on, because that's probably the most important. If you don't understand what you're putting on before we enter the trade, you're at risk and you may be too emotional and you're not prepared for the loss. I'm prepared for every single loss that I take, okay? I'll see y'all in the next video. I'm out.